The market has tons of new traders now that may not be familiar with what is going on. Maybe you have a number of questions that you need some clarification on. Well, let's go over some of the most common questions that I've received from new traders just like you. Come on in, let's talk about it. What's up, everyone? This is the Real Mark Cruz, and I'm here to keep it real with you on the things that matter the most, like your money, your mind, and of course, your time. But before we get started, I have to let you know I am not a financial advisor, okay? I'm just a dude on the internet. Everything that you see here is for entertainment and educational purposes only. So I get a lot of questions about trading in my DMs on Instagram and Facebook, and I figured, you know what? It'd be cool to compile a list of like the top 10 questions that I received the most from new and beginning traders. So this is in no way meant to be like a step-by-step guide or anything like that, okay? But if you are a new trader, maybe your question will be answered here. If it isn't here, feel free to DM me on Instagram or leave me a comment below and I can always make another video just like this, okay? So if you guys want like a step-by-step investing guide, I can also do that too, so let me know. All right, so let's get on to the first one. When is the best time to invest in stocks? Well, I actually love this question. This is probably the one that I received the most. To be honest, since there are so many variables that go into determining when the best time is to buy any given stock, let me break it down like this, okay? First things first, you'd have to determine what your goal is for that stock and what you plan to do with it. Do you see it as a long-term stock? Do you see it as a short-term or swing trade? For example, do you think that price is going to go up? If so, you should probably buy that stock, of course. But if you think the price is going to go down, you should think about shorting it if you are into that. You have to have that clear before anything else. That is a general overview, of course, but my personal rule of thumb is actually quite simple. If I believe a stock price is going to go up, for example, I first check if all of my data points make sense. Assuming that they do, I wait till there is some sort of pullback or a dip in the price. If it seems to be respecting a previous area or a price point, generally that is a good indicator that that stock will bounce from that point. So, to answer this, that is where I will buy in. I buy when the stock is falling and I sell on the way up, which seems counterintuitive, but that for me has been the most effective strategy. I buy the dips and I sell when the stock rips. So the next question is, how do I find good stocks to invest in? Well, there are a number of ways to do this, to be honest. Some traders use a number of stock screeners, while some use a slew of fancy tools and websites. If you're a technical trader, you can of course just look directly at the chart of that stock to see its history and to see if there's a pattern forming that falls in line with your goals for that stock. Others use signal services from traders to get alerts on upcoming trades, and some people even use Reddit. For me, I would say I find myself to be more of a fundamental and news trader with sprinkles of technical trading. So my stock plays come from a few sources. The built-in screener on the Webull app is actually really good, as well as its market's function, right? That allows you to find stocks that are trending by a number of data points and industries. So at times, I will start there just to see what's going on. Once I find the stock, I will see if there are any upcoming news catalysts that could, potentially move that stock ahead. After that, I look at the financials and the background of the company, and I make sure that the volume and market cap are pretty healthy. After all of that, I look at the chart to see if there is any technical basis for an upcoming move. Once all of those things check out, I will make my trade accordingly. Other times, I find trades on Reddit or trends that are building around the stock, like on Twitter or something like that. So if there is something going on in the world that may affect a certain sector or a company, I would hear about it there. Information can literally come from just about anywhere, so I would say that the real skill that is necessary is learning how to interpret real-world news and how that will affect a certain sector or a business, right? So, for example, if there is a breakthrough in battery tech for Tesla, odds are that the stock will go up. If there is a shortage of a certain type of food or a commodity like gasoline, odds are that will affect those companies and the sectors that are related to those negatively, for example. The next question is, what kind of stocks should I avoid? Well, that's actually a great question. I tend to avoid stocks that have low volume, low liquidity, and that have no sound fundamentals, right? If a stock has low volume, for example, odds are that it sits at a price range for quite some time. And if there's a big buy or a big sell, that stock will move way too quick for my taste. So those types of stocks tend to be way too risky. I also avoid stocks that seem like they only move from one major news piece, or catalyst or whatever, you know. A company that moves quick, it generally doesn't have sound fundamentals. And unfortunately, more often than not, they tend to drop just as fast as they rose. The next question is, how many shares should I buy of a stock? Well, this is one of those questions that I get a lot. All right. The easy answer is that since no two people's scenarios are the same, there isn't like a one size fits all response to this question. You alone are in control of your investments, so at the end of the day, that is up to you. However, what I can say is that the way to find out how many shares work for your scenario, I always suggest that investors, they should have a diversified portfolio. Never place all of your money into one company or into one sector of the market. Diversification, it's going to help you to keep your portfolio afloat in the event that a company or a sector, it tanks for whatever the reason is. For new traders, I'd suggest investing into 5 to 7 companies when you start out, and maybe 10 if you're feeling fancy and you need some razzle dazzle in your life, right? But anything beyond that, it would be way too hard for you to manage. So keep it within that range. Well, the next question that I have here is, what is a penny stock? Well, according to the Securities and Exchange Commission, or the SEC for short, penny stocks are shares of companies that trade at $5 or less. Most traders, however, they classify penny stocks as those that trade below $1 per share. At its core, the term is essentially used to describe companies that offer cheap shares into the market. Investors, they tend to find these types of trades appealing because, at their core, they have the chance to offer higher returns with lower initial investments. It is a lower cost of entry to get into these stocks, so your money will essentially stretch farther and it'll allow you to buy more shares of that company. Alright, so the next question is, are penny stocks riskier investments? Well, the short answer, yes. They definitely are risky. Although penny stocks sound awesome, they are super risky plays. Penny stocks are extremely volatile, and those companies tend to have a higher chance of failing or closing their doors. Some investors, they see these plays as short-term plays, so they jump in quickly, they make their profits, and they jump out just as fast. Another risk with penny stocks is that they tend to have a higher risk of fraud associated with them. So many times, penny stock companies, they've been known to be pump and dump schemes, so that is always a risk to be aware of, right? When it comes to penny stocks, for me, I only invest in those that I have an interest, an expertise, or a decent amount of knowledge on. That way, I can better understand if the company is a fraud or if it's something that is just starting to blossom. The next question is, can I really become a millionaire with trading and leave my day job? Well, yeah, you most definitely can. It is something that a number of people have done, but keep in mind though, statistically speaking, according to some estimates, only about 10% of people that try out day trading actually become consistently profitable in doing so. So, not to deter anyone, but the odds of consistent success are pretty low. But don't let that deter you though, okay? With all the knowledge that's readily available today, I'm sure that percentage will, of course, rise over time. Granted, trading is hard and it requires a level of discipline and an emotional disconnect to money that has to be learned and perfected over time. You have to be consistent, you have to follow your own personal trading rules and goals, and you cannot sweat losing money, okay? Losses are part of this game, and at times, the losses may be big enough to make anyone sick to their stomach. How you bounce back, however, is probably the most important thing to learn in day trading. The quicker you adopt that mindset, the quicker you will be on your way to success. Alright, so the next question is, how much money do I need to start trading? Well, honestly, it really depends on your trading goals. Are you looking to make an extra $500 per month? Or are you looking to replace your day job? Once you know the answer to your goals, I would say it makes sense to start with less because when you're just beginning, it's actually a lot safer. Losing $1,000 feels a lot different than losing $20,000, so it is best to experience the ups and downs of the markets with a smaller amount of money, just to see if you are prepared, for this roller coaster. Trading with a smaller account, it also forces you to be more conscious and precise on the trades that you are making, since you have to strategically make them to make the most sense for your account. If you trade with too much money in the beginning, you could easily burn through your entire account with a single bad trade. I also suggest that new traders play around with paper trading. It is a great way to learn how your app works, how the buttons work, and to understand charts and things like that. You essentially trade with virtual money, so you don't have to be stressed out. However, that is also one of the downsides of paper trading. Mentally, you don't assume any risk, so the potential for you to learn to trade recklessly, like in real life, can be exacerbated because of this. The next question is, what kind of stocks should my portfolio include? Well, a general rule of thumb that I share with people is your first stocks should be companies that you know, that you believe in, and that you understand very well. Picking companies like this, it's going to help you to build a portfolio that you're confident in and that hopefully you won't abandon like at the slightest percentage drop, okay? Other than that, like I stated prior, I always suggest having a diverse portfolio. You never want to have all of your stocks in tech, for example, right? You might want a few in tech and some in travel, some more in fitness, and things like that. Depending on your goals, though, you might also want to have a few dividend-paying stocks in there as well, as that's going to help you to make money just for holding on to them. The last question that I have here is, how do I get started in trading? Well, to get started in trading, I always recommend that all new traders try to understand the mental and the emotional aspects of trading first. I actually made a video about just that, and you can see it here in the link above. Other than that, you definitely need to have a budget set aside as to how much you are actually willing to trade. Only put in what you are willing to lose, since this is a real risky thing to get into. If you want to see a video on budgeting that I made, you can check that one out here as well. You also need to select a broker that makes the most sense for you. There are a number out there, of course, but I prefer to use Webull. If you want to use them and get 2 free stocks when you deposit your first $100, use the link in the description below. Those are the basics to get started, but like I said in the beginning, if you want me to create like a full step-by-step guide on how to invest, let me know in the comments or DM me on Instagram. Alright, well that's what I have for you guys today. Thank you so much for all of your questions. I really appreciate it, okay? If you have any other questions that you'd like me to answer, let me know in the comments below. Don't forget to like, subscribe, and of course share this with someone who might benefit from this information. With all that being said, keep your heads bright, your wallets tight, and grab your dreams like it's your right, my friends. Peace.